What is going on, guys? It's your boy Young Lifestyle bringing you another video. Now this has been a highly anticipated video. A lot of people have been asking me to do this video, so I told y'all I got y'all. To start off, I just find it really crazy how people have money to invest in designer belts and freaking Jordans, but they don't got no money to invest in stocks and invest in themselves. So today we're gonna teach you beginners how to invest. So first we gotta ask ourselves, what exactly is investing? Now investing is expending money with the expectations that you will receive a profit from investing that money. Now what comes to mind when you're thinking about investing? Stocks, bonds, real estate. That's mostly what people think about when they think about investing. There's much more to that. Those are basic types of investing, but there's also another part of investing I want to talk about. That is human capital. Now, if you don't know what human capital is basically your economic worth in the country. Let me give you an example. So you're working at Mickey D's, and I'm not knocking your hustle. If they pay you $10 an hour, that would be your human capital. Human capital can also mean what knowledge, skills, or basically experience, whatever you bring to the table, that's also human capital. Now, the reason why I bring this up is people feel like investing in themselves is not actually an investment. These are things that are helping you build yourself as a person and help you make more money, so you're becoming more worthful to a company or worthful for yourself. But enough with that, let's get into the stocks. Now we'll start this off with a quote by Warren Buffett. If you don't know who Warren Buffett is, he's one of the richest men in the world. If you don't know about him, I recommend you read some of his books or just read about him in general. He's a great guy to, get some information from. He's made most of his money from investing. Warren Buffett quotes, "Someone is sitting in the shade today because someone planted a tree a long time ago." What this means is you basically got to think about stocks or whatever business that you're going into in terms of what people are going to want in the future, and basically invest your money into that, because those are the stocks that tend to do better. I still haven't touched on what a stock is, but to some people they know it as basically something that just goes up and goes down. But in actuality, a stock is basically capital raised by a corporation issued in form of shares. If I lost anybody, I'll give you an example. Now, companies want to raise money all the time, and usually the way that they get money is through lenders, or they get it from banks in the form of loans. Now, the disadvantage of that is if the business doesn't pan out like you thought it would, you'll have to end up paying all the lenders, and you'll have to end up paying the bankers back. This does not include the interest involved in that transaction too. You still got to pay them back the money that they gave you plus interest. And this can be horrible for a lot of companies because it just might end their company because they won't be able to pay that money back. Now, the reason why companies offer stock is because it's a way for them to raise money. Buying stock basically means you own small percentages of the company. Depending on the amount of shares, you might own a bigger stake in the company. Now that we got that out the way, what a stock is, now we should go into how to choose what stocks to buy. I gotta start off by saying everybody is different in their own way. Some people like taking risks, they're more adventurous than other people. Other people like to play it safe, they don't like putting their money in a lot of different things, they're just scared. Investing as a whole is risky, but you just gotta take calculated risk. First thing I would say is to evaluate whether you're the person who plays it safe or you're the person who wants to take risks. This will help you evaluate whether you want to invest a lot of money or if you don't want to invest a lot of money, because I know the people who want to play it safe, they don't want to invest a lot. For those of you who are really scared, they don't want to invest a lot of money, they want to put little small increments of money, I got a solution for you. This is pretty easy. I discovered this app called Acorn Investing. Now what Acorn does is it allows you to invest small amounts of money weekly, monthly, or through roundups. Now roundup is basically the app monitoring your debit card usage. And usually what happens is when you buy something, so say if it's like for $25.50, the app will round up that number up to about 26. It then uses the difference and it invests that money. So I paid $31 at IHOP and rounded up, that would be 32. So the app basically invested 51 cents for me. Now it has different portfolios. These portfolios are moderately aggressive, and they have moderately conservative and conservative. I'm just at moderate. I'm in the middle. Basically, you choose the amount of money that you want to invest into their platform every single month, and they allow you to do a flat fee monthly, $10, or if you want to do it the roundups a lot. Either way, you're still investing, and you're not investing that much. So for beginners, I feel like this is the route that you should go down. As you can see, I'm doing moderate, and you can change your monthly fee. So I have, right now I'm investing, it was 10, but it went up by 2 because I was messing around with it. So when you look at the portfolio, it actually tells you the stocks that are in there. And as you can see, it has large company stocks, small company stocks, emerging market stocks, etc., etc. And when you press on them, they actually tell you exactly the companies that they're investing that portion into. So you can see there's Apple, Microsoft. They're basically using companies that are really trustworthy. They have basically over the years built trust, and you're probably guaranteed to get money from them because these are trusted companies and the largest companies in the US. Let's see, for the small company stocks, they're using like small companies, but these are also trusted. So basically that's what they do. Now, as I said before, I really recommend this app for someone who's starting out and they want to just learn how to save money and invest little amounts of money at a time. It's good to acquire good investing habits and to also, you know, put your money aside and not buy Jordans every single week. Another tip that I want to give you about stocks are, if you don't know what stocks to buy, you want to go for companies with longevity. What that means are basically companies that have been around for very long periods of time. These companies would include Apple, Microsoft, Exxon, those are just to name a few, but those are really good examples. Basically, companies that have shown steady amounts of growth over the years and they've been around for about 5 to 6 years. Those are companies that you tend to want to put your money into because you know they're trusted and you know that they're not gonna just close their doors anytime soon. If you see companies like that, and you do your due diligence and you find out that it might be a good company to invest in, by all means, go and do it. Don't just think about it, go out and do it. The thing I want to tell you is I want you to stay away from tech companies if you're just starting. Tech companies might sound like a really good idea, but tech companies, they fail a lot. Like, tech companies are being born every single day and they're failing like months later. Like, if you're gonna do a tech company, you want to do your due diligence, you want to do all your research. You don't want to just jump into it because tech companies fail a lot. Now let's go into some other tips. There's various ways that you can make money from stocks, not only waiting for the price of it to go up. You can also make money from it through dividends. Now a dividend is basically a sum of money paid out to you through the company, its shareholders, basically from the profits that the company made. These might be given out quarterly, maybe once a year, but these are different ways that you can make money from a stock. The company gives you a dividend based on the percentage of stocks that you own. So basically, the more stocks that you own, basically the bigger the dividend will probably be. So you tend to want to go for companies that offer dividends along with their stocks, because along with their stock price going up, and you can sell that and make money that way, but you can also stay with the company for a long period of time and you can get dividends from them, just depending on the amount of shares that you have. My next tip is to buy when people are selling, but to also sell when people are buying. Now I understand that you're scared there might be a recession, or you might have just bought a stock and it's going down. Please don't sell them that quickly. Major fortunes are made during recessions because people tend to sell their stocks because they get scared. They feel like it's about to plummet. Usually that's not the case. Usually the case is you might want to buy more stocks because the price went down. So in turn, it can't go nowhere else but up. Basically, buy at a low price and wait. This tip is really important. Now, you need to listen to the news. I see too much of y'all too focused on celebrity news, all that gossip news. You need to pay attention to the real news. Watching the news can help you buy stocks and find stocks to buy, or it can tell you when to sell stocks that you do own. Here's an example. I think about a year or two ago, the craze for Pokemon Go came out. Now, mind you, 5 or 6 months prior to the launching of Pokemon Go, there were articles or speculations that they would come up with something like that. Now, you hearing about this news could have led up to you buying that stock. Then 5 months later, when Pokemon Go did release and it was very successful and the stock did go up by about 350%, do you see what I mean? Listening to news can be very beneficial for you. If you just watch news, you can know what's going on, so you can know what to buy, what to sell, what to do. Now, this tip is for people who are investing more amounts of money. If they're using brokerage accounts, you want to invest at least $500 at a time. Brandon, I don't got $500. I don't got $500 to be investing. You got Yeezys, you got Jordans, you got Margiela, you got all that, but you can't invest $500? I don't want to hear that. Every time you do a stock trade using the brokerage account, you usually got to pay a $10 fee. If you were to buy $500 worth of stock, for example, and the stock itself is $50, which means you would get 10 shares of that stock. Basically, once that stock turns to $51, you would make your money back that you had to spend to, you know, pay the brokerage to buy those shares. Now, one of my final tips is not to invest all your money in one stock. People tend to get this notion that if you put all your eggs in one basket and it does work out, and sometimes it does work out, but most of the time it doesn't. Best thing for you to minimize your risk is to diversify and put your money in a lot of different stocks, because if one does fail, the other ones will cover that loss and it won't be as bad. If you put $10,000 into one stock and the company fails, you just lost a lot of money. If you put $10,000 in 25 different companies, it won't be as bad, because I'm pretty sure 25 companies aren't gonna fail at the same time. So a lot of you are scared of investing, but you gotta minimize your risks, so diversify. It will help a lot. Now, I wanna give you another tip. Please, please, please do your research. Don't go by what your friends say. As much as they might think they know, do your own research. Do not read blogs, do not do none of that. Do not go by speculators. Don't go by, oh, this guy is an economist or whatever. Best way to do research is to find the company's earnings report and you read it yourself. Numbers do not lie. If you feel the trends of the company is going good and they're going up and you feel like the company can maintain these, go for it. If you have a gut feeling that you're reading the report and their earnings are going down or they aren't really stable, well, that's your decision, but usually go with your gut. If your gut is telling you not to do it, do not do it. Now, I know a lot of you want to get started with your investing, so the company that I use is E-Trade, but there is a lot of brokerage companies, but I feel more comfortable with E-Trade. By all means, use another one, but this is the one I'm going to show you how to use because this is the one that I use. So to get started, we first are going to press open an account. Once that goes through, you're going to click brokerage. You don't want to choose any of these other ones. You want to choose brokerage because you want to buy stocks. Next thing, it's going to ask you your account type. You're going to choose your account type. If it's only you, you're going to put individual account. Joint account, I guess, is if you're with somebody, 2 or more people. Custodial account is an account managed by an adult custodian for the benefit of the minor. Then you want to press I am new to E-Trade since you don't have an account. You're going to put in your first name, so we're going to put in a fake name. We'll put in Sarah Johnson. Gonna put in an email address, Sarah Johnson gmail.com. Continue. Then I'm not gonna be able to go deep into this because now this is the part that I'm not gonna be able to pass. You're gonna be able to go to account setup. Basically, it's gonna ask you what type of account you want, and you're gonna just press brokerage again. And then after that, it should ask you for your financial information, your bank account information. It does take about 5 to 6 to 7 business days to process, so don't worry. After about a week, you should be good. You should be able to buy your stocks. And then after that, you press confirm and submit, and then you just wait. Now, I know you want to start investing, so the instructions are right there. E-Trade offers very simple instructions, but if you do have a problem following the instructions, let me know in the comment sections below. I will make an E-Trade video to show you exactly how to buy your stocks and stuff, and to, you know, possibly put money into your account and stuff. So guys, I know that was a pretty simple video. I didn't want to go too much into it because it's basically for beginners, but basically that's my tips for you beginners. I really hope that you took something away from this video, that you learned something that you didn't know about investing. I'm by no means a professional. I just know a decent amount to get me by. But if you did learn something, let me know in the comment sections below. I love to know that I helped you. And if you did find this video helpful, please share it. Help somebody else learn about investing. I'm just tired of seeing people waste their money on Jordans and all these fashion and designer things that they don't really need. Like, we need more people to invest. If you like these types of videos, help this video get to 500 likes, guys. I know we can do it. Get it to 500 likes so I can make more, you know, finance videos or videos to help you with your life. It lets me know that I'm doing something right. Until next time, guys, it's your boy Young Lifestyle signing out. Peace.